It's only a few days for the new year to strike in. But what's 2025 going to look like for the IT sector? It's one sector that's hit record highs recently. The Trump euphoria, the expectation of more business coming in, a weaker rupee of some of the factors have actually helped the IT space. But Rucha is standing by with a quick check on what we can expect for 2025 when it comes to IT stocks. Rucha.
Right, thank you so much. Good morning. So as you rightly mentioned, Nifty IT has touched record high, but let's look at what's in plate for 2025 for IT. Now, talking about the US recovery in demand, US is likely recovering largely based on what company management also mentioned during the last earnings season, especially the BFSI space, that is the banking space in the US, will largely recover and therefore aid growth. Clients therefore expected to accommodate more IT spends, and this will eventually float down to the revenue for Indian IT companies. Moving on to talking about macroeconomic concerns. Now, this was one of the points which was weighing heavy on Indian IT sector. This is also now expected to soften a little bit, and therefore growth is expected to pick up. Talking about the Trump's presidency in the US, it's the positive changes in terms of reduced tax rates that Trump will likely make will aid margins for IT companies. But the visa cost, that H-1B visa cost, will largely, Trump will largely make changes over there. But one positive point for Indian IT companies is that they have reduced reliance on H-1B visa employees by hiring locally, and therefore this might be positive, and Indian IT will save on visa costs. Now, problem of deal conversion into revenue, this was also one of the points which was a concern for Indian IT in calendar year 24, and this is now behind because revenue is picking up and deal wins are gradually slowing down from the record high that the companies had bagged 2-3 quarters back. Moving on to, most IT companies will also, as I mentioned, witness positive trend in the banking space, especially coming in from US, but Europe and UK largely expected to remain weak in calendar year 25. But moving on to what brokerages are expecting, we look at what HSBC has viewed. It expects 5 to 6% medium-term compounded annual growth rate over CY25, but it says that FY26 will largely be better, not because growth will be better, but because the base, that is FY24 to 25 base, is largely soft over here. It is also saying that macroeconomic is looking up good in the US. However, Europe, as I mentioned, expected to remain weak. A lot of companies are also talking about generative AI, but HSBC believes that the positive impact of generative AI deals on revenue is still there to take place, and therefore might be marginally positive to neutral in terms of generative AI deals converting into revenue. Global capability centers largely possessed as a threat to Indian IT companies, but it believes that the worst is behind, and now market share of Indian IT companies is expected to pick up. Another brokerage note, Citi we have on Indian IT. Again, it says that gradual and uneven recovery. So recovery is there to take place, but a gradual one is what Citi believes. And Indian IT is also close to multi-year peak in terms of valuations, largely driven by the local inflows. In terms of stocks, it prefers Infosys and HCL Technologies. However, it has a neutral rating on both of these. But the two stocks which are expected to benefit from a recovery in the banking space in the US is largely LTI, Mindtree and Emphasis, but Citi has a sell on both of this. But largely, let's talk about which stocks, did well in CY24. Nifty IT up around 29% in this calendar year, so that is huge. Largely driven by Persistent System, 77% returns in this calendar year. Strong execution and improvement in margins is largely what we saw in Persistent System. Also followed by Coforge. So largely mid-cap names is what did well, 50% returns over here, followed by Tech Mahindra, 39%, largely on the back of management changes. Over here, then followed by HCL Technologies, 33. And if we can move on to next slide, we'll see the top names have also given healthy returns, but of course the mid-cap names did clearly well in CY24. This is broadly what we have for calendar year 25 and on.